Howdy there folks, and welcome into today's video. Got some very important stuff to talk about in today's video. I got some very important things to show you in regards to the market, what's going on, certain things that are happening out there that I kind of want to explain, okay? First thing I want to tackle here is something big picture, all right? Now, if you listen to some folks out there, they say things like, the only way stocks and crypto and everything can go up is if the Fed is expanding their balance sheet rapidly, right? And this is usually kind of an uneducated view in my opinion, because if you look at history, this is not true whatsoever. We can see time periods when the Fed balance sheet doesn't increase substantially at all and the stock market does very, very well. We can go back to times when the balance sheet even shrunk during that time and stocks and cryptos and different things, different assets actually went beast mode, right? And specifically, obviously, we're talking about the stock market in general. A good example of this in recent history is if you look at the balance sheet January 14th, 2015, it basically peaked right around then, right? And then for that time period that was, and it just stayed stable and went down over time, all the way to September 11th, 2019. So all during those many years, the Fed balance sheet didn't increase and it actually decreased, right? Now, what did the stock market do while the balance sheet flatlined and actually went down? Well, here's what the stock market did. The S&P 500 went up 49% in that same exact time span, right? The NASDAQ went up 76% in that time span. So there you were in a time period when the Fed balance sheet did nothing and actually shrunk, and meanwhile the market did well. So anybody that ever tries to tell you, oh, the market can't do well unless the Fed's expanding their balance sheet, they're either uneducated or they're just simply lying to you. It's one of those two, and it's just, it could be either one, right? If you look at actually individual stocks, I'm just hold up the biggest of the big stocks here. Here's how those stocks performed during that time period where the balance sheet did nothing, right? And actually shrunk. Well, Apple stock went up 109% during that time. Google stock went up 143% in that time. Netflix stock went up over 500% in that time. Amazon stock went up 500% in that time. Nvidia stock went up over 800% in that time. AMD stock went up over 1,000% in that time. So I hope that puts to rest this whole notion that because there's a ton of time periods you can look at in the past where the stock market did just fine and the balance sheet did not increase substantially at all. The reason I think some people are fabricating this lie out there is because everybody saw what happened obviously in the back half of 2020 and going into 2021 where the Fed balance sheet went insane, obviously, right? And the stock market went up. So now everybody, because that's the most recent thing to happen, they think that has to happen in order for the stock market to go up. And it's just like, factually, that's so far incorrect, it's not even funny. So I just wanted to point that out to you guys because I think that's really, really important, all right? Now, before we get into the guts of this video and get through everything, I want to give FTX US a shout out here. Will be the pinned comment down there. You can get up to $100 in crypto through the pinned comment down there, and you can get basically free crypto on every trade over $10. And FTX is in the news recently because Sam Bankman-Fried, the one that leads FTX, basically this came out a couple days ago. They're injecting $250 million into BlockFi and partnering with them to navigate the market. Obviously, I think Sam's like trying to be a hero in this situation. It's interesting. In the last financial crisis, Buffett came to the rescue of some of the big banks and helped out with some different situations. It seems like Sam's trying to help as much as possible with everything that's going on in the crypto space right now. And FTX US also announced they got into stocks recently as well. So they also just picked up a company named Embed Financial Technologies. And this is a pretty big deal in my opinion. You can kind of read through it here. FTX has been expanding into the equity platform over the last year. The company said it will not charge commissions or trading fees. So yeah, I'm excited for what FTX is doing in the not just crypto space, but obviously in the stock space as well. I think we can use more competition in that space. I think that that's always a good thing for people out there. The more choices we have, the better off we are, in my opinion. So yeah, if you want to take advantage of that and get your free crypto, check out pinned comment down there and make sure you use referral code Holy Samokas. Alrighty, guys. So the market very good today, right? Dow was up 200 points, Nasdaq up 1.6%, S&P 500 was up 1%, Russell's up 1.2%, Bitcoin had a good day. Bitcoin's up 4%, Ethereum's up 7%, Solana, the smaller one, right, up about 10%. So good day pretty much across the board. Gold and silver not really doing too much overall there. Big tech, interesting. So you had Shopify, which is usually seen as kind of the biggest risk of big tech. That's just kind of how it trades, at least. Makes a 7.5% move. Meanwhile, the other riskier big techs that they call them, right? AMD, Nvidia, Tesla, all were down today. So it's just weird that Shopify had such a beast day while these other, seen as riskier stocks. Because usually how this works is Shopify trades very much like a Tesla, just like usually a little more violently, let's call it that. And then it's kind of Nvidia, AMD, and stocks like that. So, but overall, big tech, it's a green day today, right? Target, I picked up some Target shares in my dividend only account here recently. And just in the past few days, and Target's a really attractive dividend stock. I don't know how many people have ever looked into Target as a dividend stock, but recently between its stock price, coming down massively, the P being very, very low now at this time, forward P, the business model is very well run at this company, and the yield's over 3%. So, Target's actually a really, really attractive dividend stock. That's why I picked up some shares here recently. And, so far, the stock's starting to come back just in the past few trading days, up about 6%. But yeah, I think that's just I like that as a, throw it in the filing cabinet. They've done well with their in-store pickup too. You go to the in-store pickup, it's quite busy usually. So yeah, I've been nothing but very, very impressed with Target over time. FinTech here today. This is strange. Very, very strange. So, I'm looking at this, and some of these stocks are starting to trade like penny stocks, basically. You look at Coin, you look at Affirm, you look at Square, look at the moves. Coin 13%, Affirm 12%, Square 11%. I mean, these stocks are simply moving like penny stocks. I mean, it's insane to see how violent these fintechs are, and a lot can be dependent upon what happens with the price of Bitcoin for some of these stocks. But obviously, Affirm really doesn't have much to do with that. That's the whole buy now, pay later movement. But it's just amazing how much traders are throwing these stocks around right now, and how much they are seen as just kind of like almost like a call option, put option on the market, nonetheless. Meanwhile, PayPal is asleep. PayPal makes this 1% move, which kind of keeps in line with the market here today. It actually underperformed the NASDAQ a little bit, but I'm like, geez, PayPal's asleep. Meanwhile, these other ones just went beast mode. But, at the same time, I'm sure if it's a red day, those ones will get absolutely slaughtered. And that's just the way they're trading. They're trading like penny stocks right now. And that's what Wall Street's doing to these big fintechs now at this point in time. You know who's sneaking up on everybody right now? Cathie Wood's ARK Invest. It's just very, very, very quietly. ARK has just gone up like almost 20% just in a matter of a few trading days, which whenever I think about ARK Invest and I think about if they're doing well or bad, I always think about the new 2x leveraged Cathie Wood situation, right? So this is a 2x leverage on Cathie Wood's ETF essentially. And look at this, just in the past few trading days, this baby's up almost 43% just in the past few trading days. And I think between this new, and think about this for a moment. Imagine you're a trader, right? You're a trader in the market. This new 2x leverage Cathie Wood situation is almost like your new holy grail. And the reason being is the moves are so crazy. Like, look at this is a matter of a few trading days. A matter of a few trading days, and this baby's up almost 43%. People dream about a 43% return in a year, right? And that baby just gave it to you in a matter of a few days, right? Now, it can take it all away, obviously, if the market starts to sink, NASDAQ goes down, obviously it's not going to do well. But the way I look at this is seeing a product like that in the market, it's going to make Wall Street want to trade a lot of her stocks even more, because imagine a situation, it could lead to possible manipulation situations, because think about it, imagine you're a big Wall Street firm, you load up on the 2x ETF essentially, right? Now you're almost incentivized to try to bid up some of the Cathie Wood stocks in the meantime, right? And get some momentum going there. Meanwhile, obviously the 2x leverage goes beast, which is your main position. You cash out of that. Then maybe you could do something like a SARK, play a SARK another time, flip that money into SARK, then go ahead, this is maybe a little high level stuff, but then go ahead, flip the money into SARK. So now you're basically shorting the Cathie Wood ETF, then all of a sudden you pull your money out of those other stocks. I wouldn't be surprised if Wall Street does that. Come on, man. You think they're not doing that? You think they don't want to do stuff like that? Come on, man. There's a lot of money to be had there. These hedge funds got a lot of money. 42% in a matter of a few days isn't a jokers. And then you flip that into SARK. You pull your money out of those stocks. They sink. NASDAQ sinks. Man, come on, man. Okay, there's some stuff going on there. That's all I'll say about that. And it kind of keeps that at the center of the universe. Also, if you're planning on, let's say, a bull run, whether it be for a month or a few months or something like that, man, you know, this is going to be something that attracts a lot of traders over time, right? Now, you want to talk about flipping flapjack and strange, and don't buy into this situation, okay? But housing stocks all in beast mode here today. KB Home up 8%, CCS up 7%, Rocket up 6%, Toll up 5%. You know, on a day like today, because so many stocks go up, it leads to a situation where some of these sectors can obviously increase quite dramatically. And we see that with housing stocks today. It doesn't mean housing's magically fixed or, oh, we're going to go on a bull run for real estate now. No, nothing's changed in real estate. It's looking as bad as ever. Probably going to get much worse over the next 6 to 12 months. And that's the situation there. And so, but, you know, when you see some momentum in the market, if you see the 10-year maybe go down a bit, everybody gets real excited and housing stocks go up. But it's like, come on, man, slow down, calm down. This is really good news. I love this. Oil and gas stocks down massively again here today. ConocoPhillips 5.5%, Marathon Oil 4.6%, Chevron 3.6%, Shell and Exxon both 3% plus on those. We love to see that. We need to see oil, commodities, everything go down. Now, the moves in these oil and gas stocks has been pretty extreme. Look at this. ConocoPhillips, in the past 11 trading days, has dropped almost 29%. Welcome to the market crash. Welcome to the market crash, oil and gas stocks. I know everybody that was playing those was laughing at everybody that's been losing in tech stocks and everything like that. Ha, ha, ha. Wow. You know, you got to be careful who you're laughing at, man, because next thing you know, everybody's going to be laughing at you. And, yeah, everybody, obviously, the last month or two has been piling into these oil and gas stocks and has shot them up to, you know, very high levels, and now they are just falling off a cliff. Like, you know, 29% 11 trading days on a big gas company like that, oil and gas company like ConocoPhillips. Geez, that's quite a drop. Look at Marathon Oil. In the past 11 trading days is down almost 32%. 32% in 11 trading days. I mean, the moves, this is what I try to explain to people about commoditized industries, man. The moves are dramatic. And the thing is, you only have so much good time. And at the end of the day, no one wants oil to do well, other than maybe people that are playing oil stocks. The government doesn't want oil to do well. No one wants oil to do well, to be quite frank, other than maybe, I don't know, OPEC and people that own oil stocks. Everybody else is rooting against this. The entire economy roots against oil. And so it's just not a good thing, right? Chevron, even a big beast like Chevron, right? Very well diversified business model outside of just, you know, strictly trying to pull oil out of the ground or something like that. Chevron's down over 21% in the past 11 trading days. So these moves have been quite violent. Now, this next slide I want to show you, this is a very, very important slide. And the reason this is so important is because some folks think like, you know, like oil and gas stocks are the play if you are in a recession or going into a recession or something like that. And so look at this next slide. This shows you Chevron's stock price in the financial crisis, right? And when it was still a lot of confusion, and President Bush and the Treasury Secretary, Hank Paulson, and you had Ben Bernanke at the Fed, when everybody was still in denial about if we were going into a recession, oil did very, very well. And stocks like Chevron, ExxonMobil, all those stocks did very, very well. As soon as we got really confirmation of, oh, we're going into a recession, oil started to spike down, and so did every single oil and gas stock out there. Now, meanwhile, the market bottomed right here, right? Market bottomed right there. And look at how poor Chevron stock did over that next, let's call it year and a half or so. Meanwhile, countless other stocks went up 50, 60, 70, 80, 100, 150, 200% over that time as the market went beast mode back over that year and a half after you bottomed in the market. And Chevron, like, you know, hardly did anything. And that's for most of the oil and gas stocks. So the fact is, if you are getting a confirmed recession, it does not mean oil stocks are going to do well at all. And actually, they'll stay in likely a weakened place even when the market starts to bounce back. And other stocks will be going beast mode while oil and gas stocks are sitting there crying. That's just the way it works, man. Now, other commodities are skyrocketing down. Skyrocketing down, that's a funny one. But no, this is great for the market. We need to see this. Oats, look at this, 11% down today. Natural gas down 8.5%. Whew, natural gas been moving down sharply. Corn down 5%, wheat down 3.5%. Silver down, dang it, silver, stupid silver. WTI down, gold down, and lumber down. We need to see this continue on with these commodities. You know, obviously, if you want to tackle inflation, we have to see these babies continue to come down again and again and again. Look at oat futures. Oats just in the month of June are down over 20%. This is obviously good for a company like Oatly. We need to see oat prices come down and begin to get more realistic, so those future contracts, especially in 2023, can be at not insane prices, and Oatly will be in a position where their margins will be able to expand and they can do better. So like I said, everybody roots for these commodities to go down. They've been in this massive bull cycle for, depending upon what commodity, for about a year and a half now. And as with all bull markets, they do come to an end, and pain comes. And I think that's what is coming in commodities future here. Now, this is important here. What you're looking at is the market returns in midterm years. And basically, the market in midterm years on average, the market does very well toward the end of the year, essentially. That's just like factually how it's played out throughout time, okay? All other years, you're a little more consistent throughout time, and it's kind of like up, right? But midterm years, it's really October, November, December is when you really get those gains in midterm years. And going into that, you get a lot of volatility. Now, we'll see how this year shakes out, because this is a weird year, because we're like down, we're like down here as of right now, right? Somewhere in there. So if we're going to make any type of bull run, holy smokes, man, it's going to have to be pretty vicious in the back half of this year. But it is just something to keep in mind. In midterm years, you get a lot of volatility in the front half of the year, and many times the market will actually decline in the front half of the year when you're essentially in a midterm election year, all right? And midterms are in November, just so everybody knows, okay? Now, an analyst from JP Morgan says the stock market is going to rally 27% to a record high. Yeah, this is a pretty big put your neck out there situation, okay? So basically, they're expecting the S&P to end the year at 4,800, a rally of nearly 30%. Their bullish thesis is this: they believe diplomatic solutions will improve in the Ukraine-Russia situation in the second half of the year and alleviate some inflationary pressures. That'd be good. Inflation will begin to slow in the latter half of 22. I agree with that. And if we see commodities keep going the route they're going so far in June, we're definitely going to see that. An influx of cash into the markets due to a record low investor positioning will push stocks higher. Definitely a possibility, but investors really want to see inflation come down. So if inflation comes down, then investors are going to feel more likely to invest that have been sitting on the sideline. Attractive risk-reward situations will entice investors, yes. And there's a lot of stocks out there that are smoking deals right now. I'm talking everything from the bigs like Meta, right? All in PayPal, all the way to, you know, small caps and mid caps, and there's a lot of stocks that are a good deal right now. The expectation is core PCE inflation, the Fed's preferred inflationary measure, will drop to 2.9% annual rate in the second half of the year. Interesting. Now, I think it's important to, you know, look at also what folks that are like this are bullish on the market, and whether that happens or not, or some mixture of that. I think it's important to look at these as well, because when you're in a very, very scared market, no one pays attention to the bull case. No one pays attention to what could go right. When people are scared, they only pay attention to what could go wrong. Very similar phenomenon to when the market is in euphoria mode and everything's going up and up and up. No one's paying attention to the person that's really like waving the flag and saying, hey, we could have some problems ahead, man. You know, look at this, because everybody's in that euphoria mode. And so right now, we're in a super scared market. Consumer confidence is super low. Investor confidence is around the lowest we've ever seen. And when you have things like that, people only are listening to what could go wrong, what could be wrong in the stock market, what do we have for more bad news coming, rather than, you know, listening to both sides, the bull and the bear case. And I think that's important. I think you got to listen to both sides at all times in the market. Otherwise, you get lost into a world of becoming a perma bull or a perma bear. And, you know, neither one's healthy. But by the way, if you're going to be one or the other, be a perma bull, because that pays off way more handsomely over the long term than being a perma bear. Always remember that. Hope you guys enjoy this as always. Thank you so much for joining me. I appreciate you. Much love, and have a great day.